Hello and welcome to the Property Unleashed with me, Mark Fitzgerald. And today I have another special guest joining me. Josh Keegan is an entrepreneur and has built a portfolio of properties as well as a letting agency in his time. From his background in the corporate world, Josh is now helping business owners get their businesses working for them so they get paid first and set up in the right way. He is also the host and one of the trainers on the Property Entrepreneurs Program, and it's a great pleasure to have him joining me here today. So welcome to the show, Josh.
Thank you, Mark. It's a joy and an absolute pleasure to be here and get a little stint on the podcast.
Yeah, no, it's good to have you. Good to have you. So for the listeners that maybe haven't heard of you or don't know that much about you, can you tell us a little bit about yourself and maybe your sort of journey into entrepreneurship?
Yeah, absolutely. So before getting into as an entrepreneur, started as an accountant, and basically in 2.5 years managed to get a chartership in accountancy. Decided that probably wasn't for me. Very corporate, and once I'd done my exams, life became quite easy. And for a lot of people, to be fair, that 9 to 5 job would have been appealing, but I was so used to studying outside and the hard work associated with it. Wanted some progression, so I left that and started what then became a HMO specialist letting agency called Zest with my now late business partner, Phil. And over a few years, we scaled that. About 3 years in, we doubled in size, but we actually went from making very little money to losing money. And it was quite a revelation at the time that had happened. We couldn't really understand why. And we also then uncovered some difficulties within that business, some real black holes, some things that we didn't consider, VAT that had been accounted for incorrectly, corporation tax issues, client accounting that we'd done wrong. And we actually got ourselves into a very, very serious kind of deep and dark black hole. It then took me about 18 months to actually get that resolved. We spent literally tens of thousands of pounds on finance professionals. We couldn't seem to get the answer. And then once we did that, we vowed never to go back to that again. So we spent about another 18 months making that business very, very lucrative and putting it into a place which meant that it was never going to get into that kind of difficulty once again. Ran that for a good couple of years as it was, and really good business. And decided almost a year ago, so 31st of December 2021, we actually then sold and exited that business because the market was changing and we wanted to do different things. Since then, I moved on to what I was doing informally at the time, which is Ultimate FD, where we basically prevent and help people that get into the same situation I got into with my trading business. They get into that financial black hole. They need financial clarity. They need a finance function. They need a team. And we help people get all that set up, help them put all those controls in place, allow them to really scale a business of value and making sure that they have control over cash. They know what their P&L is. They know how they're performing. And that is essentially what we do. And along the way, I have, created quite a sizable HMO portfolio, which I'm very fortunate that it's still managed by my previous business. That basically allows me to kind of fund my day-to-day existence whilst helping clients through Ultimate FD.
Brilliant. So you've done quite a lot in quite a short space of time as well, I suppose. There's a lot of different moving elements there, isn't there?
I guess so. It's been about 6 or 7 years. Yeah, absolutely. Probably done quite a lot. It's it's been quite a journey. It's been quite a natural journey. It's been quite a natural kind of progression. I'd say I didn't go out and consciously decide to create a lettings business. I kind of fell into it, and I think when my business partner got very sick and he kind of had to step out within about a year of working together, and he was the one with all the experience, I was thrust into. But it was make or break. It was sink or swim. So I had to learn very quickly how to recruit because I now had this person that was doing so much, and then I had to do all that responsibility. So I had to learn how to recruit very quickly. I had to learn how to manage properties effectively. We had to learn how to let effectively. I had to learn how to do portfolio building, buy properties for other people. Then I had to learn how to navigate, a cash crisis. So I think it's all. Him getting sick and then eventually passing was, very, very challenging. It was a very, very challenging time. But, in hindsight, it thrust me into a world and a world of progression and accelerated my journey because I had to very, very quickly. Like I didn't have that safety blanket anymore. I didn't have that kind of slow and steady approach. If I had taken that approach, it would have been it probably would have set us back as opposed to setting us forward.
Yeah. So a difficult time, unfortunately, but one that you must have learned a hell of a lot through as well.
Yeah, absolutely. And I think I don't know if you've have you ever heard of the what's it called? I think Mo Gaudat talks about it. Do you know who Mo Gaudat is? Talks about
Yeah.
solve for happy. Yeah, where it's the reset button. And the question is like, would you actually go back and those dark times and those things? And for him, in Mo Gaudat's book Solve for Happy, he's talking about his son who tragically passed away. And it's like the question is like, would you actually go back and would you reset? Like, would you take that event away and have that not happen in your life? And very few people would ever press the button. And I think I'd agree. It's like obviously if I could bring Phil back and him not have to suffer, you wouldn't want that to happen. But in terms of the events that took place to push me to where I am, that I'm grateful for that kind of journey and that requirement to mature, very, very quickly and effectively, essentially.
Yeah, no, good point. So if you go back to obviously Josh, the 9 to 5 corporate guy, what actually made you sort of think, hang on a minute, I need to, or I want to do more in my life, or I want to get out there, I want to create things for myself? Because I'm always interested. For me, it took a long time. Obviously, you're younger than me and everything, but it took me a long time to get that. But I think you need to have that sort of moment. It's that moment where you think, hang on a minute, I am just a number, and I need to, and there is more to this life than just, the corporate life.
Yeah, well, the first thing I'd say is I quite enjoyed what I was doing, and I've never not enjoyed a job. Like even when I was washing up at a Chinese restaurant, like I enjoyed it. I've never had I've never been one of those people that turns up and goes, "Oh, I hate this," and moans about. I do, one of the things I'd say is I don't understand those people. So that's probably something that relatively unique. When you hear these people that are just moaning about their jobs, I don't get it because just don't do it. Do something else. Quit. And I literally just recorded a podcast on my episode a moment ago saying that one of my gifts and my curses in my life has been not seeing money as a finite resource. So I was never scared to quit my job because I didn't really see money as this thing that I'd have or wouldn't have. I'd just work it out, or I could borrow, or I could get a credit card, or I could do something. So that gave me the confidence to basically quit. And I think my parents have always been very good in that because I've always known, they never, they may disagree. I don't think that my mum ever gave us like loads and loads. She didn't ever, here's 500 quid or whatever. We never had that. But they'd always create this safety net. So I knew that if it went wrong, they'd pay or they'd let me come home or whatever. But I think that moment you're talking about is, I do remember very, very vividly. It was in my kind of third placement. I was working for a big multinational defense company, moving around. And it's in my third placement. And it was, I was in a financial reporting role. And I remember it was quite a kind of there was quite a corporate structure. And then for anyone that knows about finances, you basically have I was just basic junior accountant or accountant, I don't know what I was called. And then I had a finance manager who sat above me, then a financial controller that sat above me, sat above him, then a finance director that sat above her. And I remember we had a meeting with the finance director, and it was some work I'd pulled together. So it was myself, the finance manager, financial controller, and the finance director. And I remember we went into this finance director's office, and it was absolutely fine. We sat down. It was clunky. That really cheap furniture, cheap table. It was all fine. And this guy, nice guy, but quite overweight, middle-aged man. And we sat down, we had this meeting, and I can't remember exactly the detail of it, but I think he said something, and I interrupted and basically told him that wasn't correct, or he'd missed something when he said it. And my finance manager, my financial controller, the two people more senior to me, kind of looked and like, I couldn't believe I just stuck an oar in and just said something. But then he said, "Yeah, you're actually right. I totally missed that, and that's a really good point." And then when we came out of that meeting, they said, "Josh, you did so well in that meeting. Like, in 5 to 10 years, that could be you sitting in that room." And initially, I was like, "Oh, that's really nice of them to say," and that was good for my ego. Then I started to really think about it and think what sitting in that room really meant. And I didn't really, although I respected this person, thought he was a nice human being. You know, the middle-aged, overweight man with glasses, a balding head, and a shirt that doesn't fit him in a really boxy office, looking over a runway with, some people love it, aircraft going by and all the noise outside. It just didn't get me going, and I thought, that's not where, I really appreciate the comments, but that would not be where I want to be. So five to 10 years time, that's not me. That's not what I want to do. And ironically, now I'm sitting here as a self-proclaimed the ultimate FT. So basically in a similar role to him, probably 5-6 years on, but it's, you know, a very different experience to that corporate lifestyle that wasn't really, where I was going.
Well, I suppose you've made your own sort of future, if you like. You've done what you wanted to do. So I know for a fact that you like to travel. You know, you've got a young family now as well, but you like to travel. You like to see the world. But you can do your work from anywhere, can't you? So you're not stuck in that box corporate office or anything like that. You know, if you want to go on holiday, you can still go on holiday, but you can still fit time in to do the work that you want to be doing as well, which, I mean, it's the lifestyle and the dream, so to speak, that everybody wants, but those dreams can be a reality. You've just got to make sure that you put the plan together and the hard work as well, and the discipline that comes with it. So, I mean, it's great that you got the compliment. And I suppose you could also take that and think, well, you know, yeah, maybe I am destined for better things, but I'm going to go out there and I'm going to create them myself. So, I mean, when you left that sort of corporate job or corporate element, were you building up a property portfolio alongside this, or did you leave that to just go for it, or how did it go from there?
Yeah, so this is where Phil came in. So Phil was my business partner. Unfortunately, in about a year into working together, he got a tumor in his spine, and then unfortunately passed away about I don't know how long later, maybe 2 to 3 years later. And that was a roller coaster. He was in, he was out, he was in, he was out, and it was a very traumatic kind of time particularly for his family. But fortunately, I've actually met him a few years prior. So he put an advert in on a university intranet. I was at the University of Manchester, and I still live in Manchester now. And he put an advert out, basically advertising for a finance person to come and actually help him design a system to manage his portfolio. So basically, you know, you got rents of portfolio markets, you know, managing the rents in, managing the rents out, and basically managing all the numbers and the finances to give him the reports that he wanted. At the time, either zero was something that was very new, or it wasn't like it wasn't a big thing. And for whatever reason, we thought it was the right idea to kind of create a system on a spreadsheet to do this. So we got to know each other over a period of time for about, you know, two years, trying to build this model and machine so he could essentially, you know, retire and go away and travel around the world. And so when then I went abroad for a bit, he went abroad for a bit, we kind of fell out of contact. And then it was me and my friend. So me and my friend had been living in a flat together in Manchester, and we we're both like, it would be cool to buy a place. So we, you know, we're not paying rent anymore, we're actually owning a property. And I reached out to him, to Phil, and said, look, do you mind having a conversation and you know, talking to us about this? Sent him a message, and I didn't hear back from him for like maybe a week, 10 days. And I found out later he apologized and said he just had his first son. So it's like, fair enough, you know, a lot going on. But then he agreed to come out the following week in the night time. And we sat down and we chatted for, you know, 3 or 4 hours. Phil was the kind of man that would like give you an abundance of time. Like he wasn't trying to, he would just give you more than what you ever expected. And it was an amazing part of his character. And at the time, he just bought, maybe just done one professional HMO, quite a low level, like, you know, the kind of C grade property. And it was just buying one to kind of turn into like a, you know, A-star grade, you know, professional HMO in a town in the outskirts of Manchester. And so it was a relatively new thing. And I always remember we got into the lift and we were talking, and I think he just met Dan Hill at the time. And he was just basically thinking about how does he turn this, you know, this sole tradership of just basically him doing 40 hours, you know, a week, maybe more, doing everything from being on the tools to refinancing properties into a business. And he said one of the first things he needs to do is he needs to bring some people in. And I said, well, you know what, I'm very keen to quit my job and do something similar to start a business. And I was playing around at the time with a few different domain names. I was looking at consultancy work I could potentially do. And so he said, well, let's try it out. So we tried it out. And yeah, it all just spanned from there, and it all went very, very quickly. So I kind of got lucky in a sense that, oh yeah, and on that as well, like basically the day I quit my job, we started working together within what became Zest, but also we just bought a property as well. So bought our first HMO that we did, which I sold, a few months back now. But it's so it all kind of kicked off at the same time. So bought a house, started a company, quit my job, and just really went for it. And I think one of the advantages you get when you're 24, 25 is, or one of the advantages I had is I bought a HMO, and then I renovated that HMO with my brother and my friend, who, like, we did it as a threesome, like a three business partners, but we all lived in that HMO as well. So it meant that we kind of lived for free. So although there wasn't much money in the companies for a long time, for the first 18 months, 2 years, maybe even longer, my living costs were very, very low. And so I hear people doing this quite a lot. So if anyone that's maybe on that journey, thinking about quitting or thinking about, getting into that, business life, if you can buy a flat and rent out a room, so basically mortgage is covered, or if you can buy a HMO and live in it yourself, it may not be your desired lifestyle, but it's a way to get started and a way to get going.
Yeah, it's a means to an end at the end of the day, isn't it? And of course, if it's your HMO, then you can make it as nice, or the luxuries that you want in it as well. So I think that's really, really good. So I mean, when you started Zest, your letting agency, was that plan then? Was it a case of you wanted an agency, so to speak, to start looking after your own portfolio, or was it the plan to be this big letting agency that it's become?
Very good question. I'd love to tell you it was the plan from the start, and we had this master plan, and we created it and we built it. But honestly, I don't think it was. And I think that's probably a point in itself, in that most businesses, I think, we start with this idea. Ultimate FD is a really good example. We start with a concept, and it's progressed into something totally different to what I ever imagined it was going to be. But it's where I wanted it to be, and you build it year on year. The plan initially was basically just to manage Phil's portfolio. We probably had about 20 rooms at the time, 16 to 20 rooms at the time. So it wasn't big, or 16 to 20 units, I should say, because some of them were single lets. So we built the business around managing his portfolio. But we also did it at a time where it was very kind of quite niche. There were lots of letting agencies that did students, but there are very few that did professional HMOs. And it was kind of crest of a wave as well. Like, it was at a time where professional HMOs were just starting to really take off, particularly in the Manchester area as well as the other areas. I mean, this was 7 or 8 years ago, at the start of that journey, before everyone was doing them. And it started with Phil's portfolio. People would then contact us to see if we would manage theirs, and we started to take on a few of theirs, slowly and steadily. And then I'd say what then happened was, because people wanted HMOs, they then contact us and they say, can you source these deals for us as well? Can you find these HMOs? Can you refurb and can you manage them? So basically, we then created Zest Portfolio Builder, which was then a business designed to source a property, renovate a property, and then pass it over the agency to actually be managed by us as well. So once you've got all of that going on, we've got our portfolio, we've got new management clients' portfolio, and then you've got Portfolio Builder on top of that. It didn't take long for that to become quite a large self-sustaining business, like really quickly. And for the first maybe 3 years, we were literally doubling in size each year, and it went 20 rooms to 40, 40 to 80, 80 to 160. So it was very rapid growth. And I would say at the time there were very few other people doing it, so it was hard to do effectively and do well. It was we were learning as we go, and there wasn't the models and the blueprints, and there wasn't people like me that done it, sold and exited, that knew how to do it. It was quite hard going.
Did you? So obviously, you get caught up. Well, I do. I get caught up in businesses and things, and then all of a sudden you sort of look up and you think, crikey, we've created a beast. At the end of the day, maybe it's a bit too big now, and then, like you say yourself, it's all about systemizing it and processes. But when you start out, you don't always start out looking at systemizing or processes and everything in your business. You sort of, sometimes you get to a point where it's like, oh my God, it's too late. You know, there's a mountain of work to get through now because we've come this far, yet we now need help and support. We need more employees and stuff like that.
Yeah.
Did you find that, or was it, like I say, it was quite steady, you were saying, but did you get to a point where you thought, oh, hang on a minute, we've created a real beast here?
Yeah, 100%. And I think there were probably multiple points where we realized we'd kind of created something that was quite big and quite challenging. And I think I wouldn't say it was slow and steady, but what I would say is I got forced. I say forced. I kind of had to systemize and recruit at the same time from a relatively early stage, because all of a sudden I'd gone from doing the jobs I was doing, which was probably too much, plus trying to lead and push the business forward, which was what Phil was doing. And, you know, that rug got pulled up from underneath us in, like, you know, a weekend. It's like, right, Phil's no longer involved, and there wasn't a planning. It was like, all right, he's gone, and we just had to crack on. So I was forced, and I think I've always been quite systems focused, and when we sold the business at the end, one of the reasons why I got, you know, great value is the systems, is the processes, and everything that was built in there. But I did that out of a necessity and a need to get things off my plate, and a need for other people to manage things for me. And you can't really get people to manage stuff unless it's been relatively well considered, process driven, and systemized. I think an interesting point in our journey, which I've never really talked about before, but it's like an interesting element, and it's kind of prompted by your question, is one of our biggest accomplishments was to realize we'd gone too big, and was to basically fire some of our clients. And we will talk about this you hear this all the time. People say fire your clients, but the reality of actually doing it is a very, very different story. You know, it's like letting go of money. But firing our clients was actually one of the things that threw us into real financial hardship for reasons where you may not. I'll explain the reasons in a moment. It's one of the best things we did, because it meant that we realized I think we must have got to around 290 or so rooms, and it was just tough. Like, the business was hard, complaints all the time, service failure, voids. It was not a nice place to be. And this was 3 or 4 years in, not a nice place to be at all. And it was just a very difficult place, and not enjoyable for anybody involved. So we made a bit of a leadership decision to kind of fire a lot of our clients and get rid of a lot of our clients. Now, this actually was a catalyst to the business kind of falling apart and creating the black hole. The reason for this is because I'll openly share, and I would never advise this, I'll openly share that we weren't client accounting effectively. So client accounting, when you've got an agency, is basically where you take client money. So for example, what happens is on the first of the month, we receive $2,500 from a HMO, and then at the end, on the first of the following month, we give the landlord that $2,500, less maintenance, less management fees. And that's the way it works. So it means basically in your client account for a month, you've got some kind of capital in there. Because every property you take on, you get that $2,500 at the start, and you don't pay out to the first of the following month. But on that same day, you get another $2,500 in for the next month. So what happens is, as you grow, that every property you get, it's like your balance just increases, because basically you receive the money from the tenants in advance, and you pay out in arrears. And then once you pay out again, you receive the next payment in advance. So your balance just keeps going up and up and up. So you basically end up sitting at a level with your client money. What we didn't realize, and what we hadn't got set up effectively, and this is what I help clients do all day long now, so it never happens for them, is that we weren't client accounting properly. And we were just in a place where client account was mixed with business money, and it was just all quite messy. And this is at a time where there wasn't mandatory client money protection. There were less rules around it as well. So we didn't really realize, to scale the business, we spent a lot of client money. And we'd accidentally basically dipped into the client account by accident, just by not having financial clarity on those different elements. But what happened was we were always okay, because while we were growing, every time we took on a new client, that balance just went up. And it went up again, and it went up again, went up again, went up again. So we never really ran out of money. We couldn't really understand it, but we just thought we were doing okay. We just thought it was fine, and we were just managing it well. As soon as we offboarded about 70 rooms, and if you imagine each room is about £500, that's about £35,000 of like of basic client money that goes out because we make the payment and it doesn't come back in.
Yeah.
So all of a sudden, client money's up here, and then all of a sudden we offboard and it goes zoom, like that. And all of a sudden we go from like having a really nice cash balance in there to being in negative and not really understanding what had happened. And that was the kind of catalyst for like the black hole we created. So we realized we grew a monster. We acted on that, but we weren't financially savvy to realize what was actually going to happen as a result of that. And that's what really kicked off this kind of real challenge around the finances, financial clarity, and yeah. I always make it. Well, I can make excuses. We're busy. My business partner was very ill, and I didn't have the time, the energy, or the capacity to actually deal with it all and manage it all. But the reality is, it's like we just hadn't found the team and the infrastructure to manage our finances properly whilst we were developing and growing the business.
But I suppose we all live and learn. At the end of the day, you're still here to tell the tale, which is great,
Yeah.
because you could have folded, you could have gone under, but you obviously pulled up your socks, pulled up your sleeves or whatever, and you managed to get yourself back on a level where it's a successful business. And of course, the learnings, as you say there, you've now taken into your ultimate FD package, or I always want to say, is it like a mentor? I mean, tell us a bit more about the ultimate FD.
What we do is basically create. So if you imagine, when I was in this boat, when everything had gone wrong, we created this black hole, the company wasn't performing. I ended up spending around £60,000 at about 18 months trying to just get a grip on my numbers, trying to get a grip on my financials. And basically, I finally found a solution that allowed us to do that and managed to create what we call world-class finance function. And there are different elements that you need. One of those is you need systems and software. So Xero, linked with bespoke integrations. You need 4 professionals, which is the 4 finance professionals you need to run any finance department. All paid per hour, all very cost effective, and scales up and down the scales based on the business. And you need 3 pillars, which is basically your cash flow, your P&L, and your balance sheet. So what we do now is basically we'll have a company that's maybe been going for like 3 or 4 years, or we do it sometimes with brand new companies as well. And they're in this boat where they they kind of got a bookkeeper, but they're never quite getting what they want. They've got a tax accountant, they think it's too expensive, and they're getting accounts done by them. And they need somebody to come in, look at their finance department, redesign that finance department, and then recreate, like basically create it. And basically what we do is we come in, we do all that work. We basically take it from where it is to where it needs to be using our team. We clean up, we put the professionals in place, we train everybody, we agree who does what when. We have finance reviews with them so they can kind of, we basically sense check the information that they're looking at, make sure it's good. And then we hand it over and say, look, there's your finance team, there's your finance function, this is how it's all going to work. There you go. And then we just set them off to actually work on that. And then on top of that, we do forecasting, we do models, etc. as well to help them set them up budget to actuals, but that's probably slightly more advanced. That makes sense?
Yeah. No, it makes perfect sense. And I suppose, going back through the history of the black hole that you put into yourself, it's quite easy for you to be able to walk into other people's companies and maybe pinpoint areas where that they're probably making similar mistakes in whatever it is that they're doing. And you do this for any business, basically, do you?
Yeah, I'd say majority of our companies are property based, so they could be rent to rent, letting agencies, portfolio landlords. But we've worked with engineering companies, wedding venues, all sorts, and it all applies. But it all just works and applies, and you can pop this in place. I think interestingly, I was chatting to one of my team members yesterday. And we use a lot of the work we do and a lot of the resources we use for the 4 professionals that you need: the bookkeeping, finance manager, finance assistant, tax accountant, is based in South Africa, because they've got a real sweet spot of quality versus cost. So it works really effectively and really well. And interestingly, I was speaking to her, and she was saying that basically their best UK client is the equivalent of their worst South African client. And I was saying, like, what's the reason for that? Like, why are we so bad in the UK, or why are we so bad as entrepreneurs in the UK at doing books, doing accounting, and getting clarity on all the numbers? And one of her points was that we tend to just undervalue it, and we tend to rely on cheaper labor in the Philippines, or we think we can do it ourselves when we're really not qualified to actually do it. So it's definitely an area which entrepreneurs often undervalue until they need to value it. And I was definitely in that zone. I thought, we were fine. I was looking at the bank balance. It all seemed okay. I was too busy. I had loads going on, and I should have known better. I'm a chartered accountant, but like everybody, I was doubling the size of our business every single year, and we get caught up, and we think as long as there's money in the account, we can pay our bills, we're all good. But what often happens is we outgrow whatever system we've got in place, which could be a spreadsheet. It could be we're doing the accounts ourselves. It could be multiple spreadsheets. It could be a virtual assistant, and all of a sudden this big business becomes a bit of a monster, and we lose control and we run out of cash. And then when we run out of cash, I don't know if you've ever run out of cash before, Mark, but it's a very difficult and uncomfortable situation. It can literally take years to recover. And then you're like, well, how do we stop that happening? And it's like, what we do is how you stop it from happening. You have the controls in place, you have the teams in place, you have the reporting in place, you have forecasts in place, so that cash is managed, business is managed, margins are being improved, profitability is being looked after. And as a result, things tend to go very, very well. Where you don't have this in place, that's where things fall down. We mishit things, we overlook things, and the business can easily crumble around us.
I think, well, you've hit it on the head there. At the end of the day, cash in a business is king. It's what it's all about. It makes it survive. It makes it a business. It makes it a viable business. But again, exactly, everybody always thinks, bookkeeping, I'll do that myself, like you say, or I'll just give it to a Filipino VA or somebody like that. And there are decent ones as well, don't get me wrong, but we always look at that as the last thing. It's like, I've got to spend money on the accountant, I've got to spend money on the tax advice and things, but that is money well spent. I've learned the hard way myself. You spend some good money, you get some good advice, you get good good leads onto what you're doing in your business, and it'll save you a fortune in the long run. And like you say, I think it's brilliant what you do going in there and setting it all up and basically handing this model to companies and businesses and saying, this is what you want now, moving forward. And you make it bespoken to whatever, business you're going into as well. It's really, really good. And I think a lot of people need to, take a look at this, particularly if they've started and they've already got the revenue and things coming in, because as you say, I've come very close a couple of times to running out of money just because of growth. And what we get caught up in growth. We think growth is brilliant. Growth is what it's all about. But we do want growth and we do want to build businesses. But if you're not looking at the cash flow, if you're not looking at, the books and everything as it's going, then you run out of money. You haven't got a business, have you?
Yeah, and I think that there's a few sentiments there. One would be more revenue does not mean more profit. I learned that the hard way when I doubled in size and we went from making an okay amount of money to actually losing money. And it's the key here is getting your model right, your business model, and how your margins are actually going to work. And you can only do that if you know where you are now, where you're going. It's a finance-driven business. It's like you work this out first, and then you create the business. Not the other way. Don't let the business create your finances for you. And then all of this stuff, finance is an investment, not a cost. It's most of my clients end up spending between 2 to 5% of their revenue on finance. It's not a huge amount of money, but it's what business is actually about. And if you're serious as an entrepreneur, you should be an entrepreneur to make money. The novelty of the flying by the seat of our pants, being creative all day, every day, looking for freedom, that all wears off when we're not making money. And if you really want entrepreneurship to be fun, if you really want to scale a business of value, if you want to create like long-term generational wealth, the focus should be you have a model, you know what your margin is going to be, you know what your accounts look like, you're monitoring everything, you're in control, so you make a healthy sum of money every single month that you can take off the table, and you can basically use that to fund your lifestyle. And one of the things I'd say is a huge part of like the methodology we use and the mantra we use is this is not, you don't have to be making millions and millions of pounds a year. Like for some people, making $3,000 a month is absolutely fine, but just make sure your business is going to make you $3,000 a month every single month without fail. And that's what we're trying to get people to do, and that's what we're pushing people towards, as opposed to creating a really temperamental business, one that kicks out $1,000 a month, $10,000 a month, minus $5,000 a month. That's not where we want to be. And the way we create this very consistent business, consistent returns, consistent cash flow, consistent chunks of money we can take off the table is really mastering our margins and really knowing our numbers. That's how we do that. And that's the key.
So if somebody was starting out, because there may be people listening to this that are, getting into property, they're starting out, maybe they're starting different businesses. What would you recommend they do initially, so to speak? Maybe they want to keep costs down, because we always try and keep costs down and everything. But from your experience and everything like that, what would be some good advice for them?
So I'll give some advice, but not everyone's gonna. Some people will hear this, they won't listen, and that's the reality. And like we're all guilty of this. Like if you told me at the start don't do a HMO that's going to only get you a 15% return on investment because it'll probably make you no money in the future, I would go, that sounds like rubbish. It's these things that are you going to hear, or are you going to listen? One of the first points I'd say is don't do. Well, number one, do this. Like get your finances in place. Start managing this from the start. Any serious entrepreneurs that you were going to work with in the future, I've just started a business with a very serious entrepreneur. And the first question is, when are the management accounts going to be done each month? It's like, it's not the last thing we think about. It's the first thing. It's the only thing that matters. So first thing to think about is, when are your management accounts going to be done? When are you going to be reviewing your numbers every single month? Because that's just it's a requirement. It's not something that you think about later. Second point would be, don't do this yourself. It's both above and beneath you. And so what do I mean by that? So too many entrepreneurs, they go out and think, Xero is easy to use. Xero is easy to use. Yeah, getting an accounting system like Xero is a very easy thing to use. But it's easy to use, but it's not easy to do bookkeeping. It's not easy to do balance sheet accounting. So you might be able to reconcile a few transactions, but you're not going to know where you're actually meant to put them, and you will create a mess. So doing this is above you. It's like, you are actually not qualified to do this. And if you don't know how to account for a balance sheet, don't try and learn. Like, you're not chartered, you're not qualified, you're just going to create a mess, and this will outgrow you. But secondly, it's beneath you as well, in that we should all be looking at an hourly rate. And to get a bookkeeper anywhere from 10 to 20 pounds an hour, we should all be aspiring as entrepreneurs to have a higher hourly rate than that. If we don't have that, we should go and get a job stacking the shelves at Tesco, or doing something there's far less risk, far less stress, and will pay us every single week and every single month without fail. So those would be the kind of biggest sentiments of advice, would be, make sure you do this, but please don't do it yourself. In terms of then what you actually need, there are basically three elements that you need to get this right from the start. And what I would say is, when you do this from the start, it doesn't have to be expensive at all. It can be very cheap, very affordable. And we've got clients that have retainers, or like they pay for all their finances as low as £150, £200 a month. You might be sitting there going, whoa, £150, £200 a month, that sounds like a lot of money. But your tax account alone is going to be 50 or 60 quid a month as part of that. And to then get your reports, your bookkeeping, your finance management on top of it, that to me is like, it's just a requirement. There are three elements you need. First is your systems and software. We talked about that before. You need an accounting system like Xero, 26 quid a month, roughly, to manage all of your finances for you. But it'll be a level up for your business as well. Before you even get into reporting, you've got a system that can do credit control for you, send you invoices which look professional, allow you to do your expenses and look after your receipts, etc., in one system. That's without even getting into the reporting on those different elements. You might want some add-ons to that, like Dex. Dex is a really good one. Allows you to send your receipts straight into Xero, and it kind of reads that receipts for you, automates the process a little bit. Something like Mile IQ might be really valuable if you do mileage. Allows you to, once again, just make the most of claiming for your mileage. And then you might want bespoke integrations on that as well. Don't always recommend these. And generally, if you are just starting out, you probably don't need any bespoke integrations. But as you get into like that, as your business starts to scale, you might find something like R Frontline is a really good one if you're a letting agent. Or it could be, something like SumUp if you own a cafe and you take payments. That's the system. So the second is the four professionals. So finance assistant, bookkeeper, finance manager, and tax accountant. Those are your four professionals that you need. The key is it's kind of low value, high volume, to high value, low volume from top to bottom there. So your finance assistant, they might be a VA in the Philippines. Absolutely fine. They could be $3 an hour. That's absolutely cool. But they aren't doing any bookkeeping work. They're doing operational finance, paying people in the bank, managing your expense claims, chasing your tenants that haven't paid their rent. Finance bookkeeper is for recs and checks. They're checking the balances, reconciling the bank account. Finance manager oversees them. Chartered accountant makes sure that's all being run correctly. And then your tax accountant is your strategic kind of tax planning person to help you minimize your tax. Then the third is the three pillars. So you just need to make sure that these systems and these people are producing three statements every month, which is your P&L, your balance sheet, and your cash flow forecast. that is the most basic part of this whole thing, and that will put you in really good stead to do the rest. And that's where are you now. That's giving you clarity on where you are every single month without fail.
That's brilliant. That's brilliant. Thank you for sharing that. That's really,
No
really
worries.
good. Really enjoyed that. And yeah, it's so important that you make sure that you put these things into place. And I've been one of those people that haven't ignored it all and everything to my own peril. But over the last couple of years, I've got things into place. And like you say, bookkeepers and things like that, it's not things we want to be doing. We want to be out there doing deals. We want to be out there creating a business. So why not have the other professionals or the other people doing those things for you? And that's obviously, what this is all about as well. And as I say, when you said that price as well, people start at that. That's an absolute no-brainer. I tell you now, some people might say
Well,
that's
I'm glad you
expensive.
think
I
that.
think that's money well spent.
I'm glad you think that. Some people think that 0 at £26 a month is expensive and won't pay for it. So it is a bit of a mindset thing, I think.
Well, I'm all, in the wealth dynamics, I'm all blaze. So,
Yeah.
the finances, I like to look at a bank balance and I like to think, yeah, that's, it's positive. That's what it's all about. The rest of it, I like to leave to the other people that are better equipped and will do a better job than me and can just report to me. Basically, Mark, we need to either sell more, we need to do more, we need to bring more clients in, we need more customers and that sort of thing. So yeah, work to your own speciality and move on from there. So what does the future hold for Josh and what are your plans?
That's a good question. So the business wise really is for the next year just to sell our Ultimate FD, which is going to be awesome. And it's we're already booked up mainly for Q1 2023, and it really is just basically make sure that we deliver like world class, remarkable service for all the clients that get involved and get on board and really make sure that we just become this very boutique, very niche business that is just creating like really like valuable value that our clients are absolutely raving about. Portfolio wise, I'm now moving into buying single lets. So next year we'll be buying anywhere from 2 to 6 single lets. Moving away from that that old school entrepreneur or previous me mentality where I'd go and raise the money. It's like getting the chunks out of the business and then putting them into single lets. Family wise, got a new baby on the way in early May. So we'll have 2 and 2 for about a month, which will be a blast. But just making sure whilst we're doing all this that everything's creating that everything I'm doing is very much from a it's very leveraged and it's very minimal time with maximum value added for me. So I can spend time with my family. I'm in my home office at the moment. There's no kind of plans to change. But really, I'm in a place where I'm really enjoying what we're doing. It's adding tangible value to people, and I'm enjoying the work-life balance that the kind of this company is really creating for me. So it's more of the same, I would say, essentially for a while.
Oh, that's brilliant. That's brilliant. And like I say, again, congratulations on the next edition. And also, I mean, have you finished your house now? Because I know you were renovating your house as well, weren't you?
Yeah, we did. It was the project from hell, 18 months. It should have taken probably about 9, probably less. And and it's been one of these. It's been a strange experience in that I was literally just thinking this morning or yesterday that I'm really starting to enjoy living here again. And I think we had we did it all and we moved back in. Still loads of issues, still loads of problems, loads of things that weren't fixed. But now I think we're starting to settle. We've probably been back in for about 5-6 months now, but it's weird. It's starting to settle back in. The whole house is Christmassy, and it's now just like for the next few years, just making a house a home, which is like the next step and the next kind of part of the journey. So yeah, it's life's good. We're in a really nice place, and it's now it's just continue to build all this and just keep it all moving forward.
Yeah, but that's what it's all about, and it's brilliant to see and hear as well. So what I like to do is, because I'm conscious of the time all the time, is a quick fire round where I'll ask you a few questions on different things, and I'm always keen on the answers that people give because it helps me to do a bit of homework as well. So if you don't mind, I'll just ask you a few questions and we'll fire them across. So what's the best advice you've been given?
Best advice I've given?
Or you've been given? You can do either.
Don't break the rules, probably. Don't break the rules, which basically is just your financial rules. Create some financial rules, stick to them, don't break them.
Like it. Like it. That's good. That's good. If you were still in the corporate world, what do you think you'd be doing?
Probably carried up on that ladder and become some sort of FD within hopefully a bit of a smaller, a bit of a more niche business than the one I was in prior.
Okay, cool. I like that. I like that. So if you could sit down and have dinner with three people, dead or alive, who would you like to sit down and chat to?
I would sit down with these are brilliant questions. I would sit down with
Thanks.
Jay-Z,
Nice.
probably Dr. Dre, and probably maybe 50 Cent as well. I think it'd be a very unusual dinner, but I'm big into my hip hop and I'd love to sit down with those three.
That'd be good. There'd be some interesting stories and conversations there, wouldn't
They
there?
would be, yeah. Don't know if I'd fit in very well.
No, you'd be good. It'd be good. So, obviously, you've got your own podcast, the Ultimate FD Podcast, which we can see behind you, which is phenomenal. But are there three other podcasts that you can recommend?
I listen to Diary of a CEO, which I'm sure a lot of people do. I listen to Dan Hill's Property Entrepreneur podcast, and I think that's actually. I mean, it's only really those two that I tend to listen to outside of yours and mine as well. When I say I listen to mine, it's basically just for feedback purposes for myself. But yeah, I'd say those are the main two. Sometimes like to listen to Off the Menu, which is a basic comedy podcast with where they do like a magic restaurant with the two comedians, which is good.
Okay, I like that. I'll check that one out. Well, this might just be me, but when I have to listen to my own podcast, obviously, like you say, for editing reasons, to make sure that it all sounds good and everything, I have to listen to it at the fastest speed possible because I hate the sound of my own voice. Do you have the same, or you're all right with yours?
I'm okay with it. I wish I could pretend it was for editing reasons. I actually like it's a weird one because sometimes like if I have a guest on and record an episode, I don't really feel like I take much of the actual content in. And I don't know, like you may have like you've asked me loads of questions, but because you're always thinking about the next question, thinking about whatever, like what in the direction, like what we need to talk about next. I don't really feel like I actually take much of it in. So I actually find it really valuable to listen back so I can actually hear what the actual person said. So no, I don't necessarily need to speed it up, but yeah, I know what you mean. I very rarely listen to anything that's just me just talking.
Right, fair enough, fair enough. And for the listeners, what does your podcast basically talk about?
The Ultimate FD podcast. So all sorts really. Like I guess the spin is it's all relatively financial. So we talk about building a valuable business, mastering your margins. We literally have some episodes which are almost like a textbook. So one of the most popular episodes was called Balance Sheet Blueprint. So it's basically just teaching entrepreneurs what a balance sheet balance sheet is and how it works. We have a monthly tax podcast where we talk about specialisms within tax with a tax accountant, and basically the whole kind of concept is trying to make financial subjects which are interesting to people understandable, because I find that most of the time accountants tend to just baffle you. So it's trying to be that translator and get it across so people can really understand this stuff, find it of interest, and actually like progress in it.
Brilliant, brilliant. So it's well worth checking out, and we'll put links
Thank
to the
you.
show notes for it and everything. So what's your top three books you'd recommend?
Top three books. I'm trying to think what comes to the top of my head. Well, I've got some ace ones up here. So they're not necessarily in line with the financial stuff, but I'd say one of the top three books is called The Book of Joy, which is basically interviewed by Dalai Lama and Desmond Tutu. Amazing, just like basically about two amazing people and what they actually aspired and how they looked at life. Another one, Surrender Experiment by Michael Singer. I don't know if you read that one.
I haven't, no.
Surrender Experiment. Basically, Michael Singer is a very spiritual man, and basically just lived his life by, even though his mind was saying no, I don't want to do that, just lived his mind by saying yes. And it's like the journey he went on is phenomenal. Basically, from living in the woods to being this kind of global multi-billionaire businessman, and it all kind of happened by him saying yes. And then third book, I'm reading it again at the moment. Let me just remember what the title is. Yeah, that's it. Man's Search for Meaning by Viktor Frankl. So I'm reading it for a second time. I very rarely read books 2 times, but it's basically. Have you heard of that one?
Yep, yep.
Yeah. So it's basically he was a psychologist that ended up in a concentration camp, a long time ago, and it's basically him talking about all the experiences they had in there and the psychology of all the prisoners and how it went on. But there's some real kind of key messages and learn notes in there about life, and it's a really powerful one to read when you're if you think you're tired or go through a hard time. Just read that. It's incredible. It kind of changes your perspective on the way you see things.
Yeah, I've heard good things about it, but that's 3 great books. Thank you very much for that. I shall certainly put them on my list to
No
get
worries.
hold of. So, I mean, basically, it's been phenomenal to have you on. Thank you ever so much for your time. It's always great to have good guests on who come with different spins on things. And if anybody wants to reach out to you, what's the best way to get hold of you?
You can go to ultimatefd.co.uk. Check out the website. It's ultimatefd.co.uk. Or you can feel free to just find me on Facebook. Follow me, Josh space Keegan, Kewgan, and then send a message on there, and I'll be available to support and help you if we can.
Excellent, excellent. So I'll also put some links to Josh and everything in the show notes. So if you are listening or watching this and there are show notes, then you'll be able to just click away to your heart's content on there. So once again, I'd like to thank you for joining me today, Josh. It'd be great to have you back in the future as well to continue about your journey and how things are going for your good self, if that's okay with you. Have you got any final thoughts before we wrap this one up?
No, just it's been a pleasure. You've gone kind of deep into the journey, and I made a lot of mistakes with my first trading business, and luckily, kind of we got out the other side. But what we're doing for people now, we're in this kind of world, and taking your finances seriously. It's just one of those things which I can speak about till I'm blue in the face. But whether you reach out and you let us help you, or you do it yourself, just start really taking your numbers seriously. Start seeing finance as investment, not a cost, and getting clarity. And really knowing your numbers and really creating a business that's finance driven, that is where you will have your best years on record. And that's where you create a low stress, high value business, which you start to really get paid from. So this is, you don't need to look outwards and find more clients, more sales, more deals. Like if you start looking inwards, this is where the value really comes.
Yeah, excellent advice. Brilliant. Great stuff. Well, thank you ever so much once again. So as always, guys and girls, thank you for joining us today. Keep focusing on your vision, keep pushing towards those goals, and bye for now.